What's up everyone, Matt at Trades here. So coming at you with another video. So as usual, we're going to do a quick update on our profile. So we've been down a little bit this last week, just kind of going with the trend of the market, doing a little bit better overall, I think. Well, we'll find out, I guess. But today has been kind of up and down. Right now we're down about 0.72%. The market is down 0.94%, so we're doing a little better than the market today. For the week, we are down 8.31%, so not a happy week for us, but the market is down 13.21%. Oops, right, that's the month. The week is down 4.46%, so the market's beating us for the week. For the month, the market is down 13.2%. We, for the last month, are down 12.66, so we're doing a little better than the market. The last 3 months, we are actually up 28.75% for the last 3 months. The market is down 7.42, so we're outperforming the market by quite a margin for the last 3 months. For the last year, the market is down 18.28%. It looks like we're making new lows, but 18.3% down for the year. We, for the year, are down at 9. So we are basically doing twice as good as the market right now, or half as bad, I guess is the better way to look at it. But let's go through the trades that we are in and have done the last week. So Ford, I actually sold some puts on Ford. So we already had sold puts, or sorry, we had bought some shares and we'd been selling calls, and then Ford just kept going down. So we actually sold some puts at $10.50, and I actually haven't put that in yet. So I'm going to do that right now. Put the blue line at $10.50. All right, so that's where we have some puts. If it goes below there on the expiration on Friday, then we will be called to buy 200 shares. We sold 2 puts, collected $16, $8 per share, which is per contract, and that's a 7.76% return on investment, or rather the money that we've put up for collateral. So we'll keep an eye on that. Looks like it's staying around here, and I decided to do this just because I want to see if I can work on bringing our cost basis down a little bit right here. That's what this red line is. This is essentially where the stock would have to go for us to break even. But it looks like there's some pretty good resistance just above where we sold the put. So that's kind of why I decided to go here. If it does go down below, well, I actually think it's a pretty low chance that it does. But if it does, there's pretty good resistance right here. So that's why we did that. Charge point, we ended up rolling that position to this Friday. I believe we did that last Friday. We did that while it was kind of still in between our cost basis and our average cost. So we collected a lot of premium, 2.42% return on that actually. It's another $80, $40 per share, or per contract. We had 2 contracts. So this one looks like it's going down, but we have a couple of levels of pretty good resistance here, which should help us bounce back if it continues to go down. That's the hope, at least. Penn National Gaming actually expired, or not expired. Well, it did expire, but it expired out of the money, so we had those shares called away for a total profit of $164 with our one options contract. That was a 5.66% return overall, so that was good. I'm gonna go ahead and close these out since that is no longer relevant. Black Rifle Coffee Company got called to buy shares at $9.50. Cost basis is $8.95. And it looks like it's still continuing to go down, but it looks like we're at a level right now of possible resistance. So hopefully we get a good bounce here. So that's what we're hoping for there. Rivian is another position that we rolled last Friday to expire next Friday, and it's still in a good position here to where we are collecting good premium on that. We actually had a 2.46% return on those calls that we rolled. Collected an extra $172 for this wheel cycle. We are up $902 just on Rivian, which is good. So we'll keep an eye on that. Probably possibly look at rolling this position again this Thursday, maybe on Friday. We'll just see how it goes. Gap, as usual, we're pretty far away. Not much we can do with this. I might start looking to be a little more aggressive with selling calls, possibly just because I'm most likely going to be selling this position at the end of the year for tax reasons, or closing this position at the end of the year for tax reasons anyway. So might as well see if we can collect some premium, be a little more aggressive there. Same thing with our position on Matterport. So, yep, not looking so good. And Alibaba, let's see, this position expired worthless. So we'd sold the puts, it expired worthless. We didn't have to buy the shares, we collected the premium. So we can close that out. So that was a successful trade. Palantir, let me see, what did I do with Palantir? Same thing. It sold puts at $7 at the strike of $7.50. Expired worthless. We kept the premium, so another position that we can close out here. Might be worth looking at selling puts on again, just because there's good resistance right here. Right here, so there's some decent resistance too, and then of course the bottom back in May. So a couple levels of resistance there that's going to go toward our favor if we do get called to own shares of Palantir. So we'll probably look at this one maybe next week to sell some puts on. Starbucks is one that we sold the puts on this week, and at the strike of $84, and we collected $62. We only sold one contract, and that's a 0.74% return on the money that we put up as collateral. I decided to do this one because, again, it looks like the stock is trending up overall the last few months, and some good levels of resistance. So, well, that is it for today. Simple video, nothing crazy, just an update on the portfolio. Please like and subscribe. I'll see you next time.